Several of our viewers have asked about reducing their stock market allocation. We're going to take a look at two stable ETF funds for conservative stock market investing. So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Invest. 2021 was a big year in the stock market. We had some incredible returns, but not every year is quite like that. And many investors want to take a more conservative approach. They want nice, steady gains, but they don't want to get large losses to their portfolio, especially if they're close to retirement or already in retirement. So we're going to look at two ETF funds here that are very stable. Our first fund we're going to look at here is Vanguard Wealthy Income Fund. I know many of you are already familiar with this, and I'm going to tell you why I like it. First of all, it has a yield of 2.4%. So let me tell you why I like this fund for a conservative investor that wants a stable fund. The equity holdings on this, the stocks that it holds, is 38% right now. Now that can go up to maybe about 40% at various times. And the fixed income portion on this right now is at 57%. We're looking at the top 10 stocks that make up part of that 38% equity or stock market exposure. You can see these are all name brand companies, top blue chip stocks. We're looking at the percentage of stocks allocated for Vanguard Wealthy Fund. And this gives you an idea here of the percentages. The nice thing I like about this for right now is technology's only 7.38% on the low side, and on the higher side is financial services 22%. The bond portfolio on the Vanguard Wealthy Fund is made up of bonds that have a credit rating of BBB or better. Those are all good quality ratings. If we look at the total returns here on the Vanguard Wealthy Fund, we can see in 2021 it had a return of 8.5%. And then you can see the returns here over the last 10 years. Again, we're not looking for a blowout fund here that's going to be at the top of the market. We're looking for steady returns with low risk. And you can see on the downside here, in 2018, it was down only 2.57%. Now, year to date, it's down 1.9%. We've had some selling in the markets, but let's compare it to the S&P 500. The S&P 500 year to date is down 8.52% compared to the Vanguard Wealthy Fund. The Vanguard Wealthy Fund is our first stable conservative fund that you can invest in that's going to give you nice solid returns without large losses and nice steady gains. Our second fund here is Chartwell Income Fund, and it has a dividend yield right now 2.58%. Now the Chartwell Fund is even more conservative than the Vanguard Wealthy Fund. The total equity holdings are around 22%, and the fixed income portion is about 67%. Now the top 10 holdings with Chartwell are mostly Treasury notes and fixed income, and Verizon's the largest stock that they hold right now. If we look at the percentage equity exposure for Chartwell, we'll see again technologies on the low side at 8% and financial services on the high side 14.42%. The reason I don't want to see a high technology portion right now is because technology stocks can be highly volatile. If we look at the bond holdings, it's a mixture here, but most of it is lower duration bond funds. And the credit rating is primarily government and securitized bonds. If we look at the total return here, you can see here over the last 10 years has been very steady. In 2021, it was up 7.35%. It was down 3% in 2015. So nice steady gains and no large losses. Year to date, down 1.2% compared to Vanguard. Vanguard was down 1.9% and the S&P was down over 8%. Let's take a look at the Vanguard Wealthy Fund chart. This is a weekly chart, goes back about 2 years. The red line here is a 30-period moving average. Now keep in mind, back when we had the pandemic, everything came down. So never take your eye off of the ball on any investment that you own. Here's the weekly chart for Chartwell Income Fund. Again, we have the 30-period moving average, and you can see when we had the pandemic, we had a dip in the market. However, the dip in the market for Vanguard and also Chartwell was not as large as it was for the S&P 500. Vanguard Wealthy Fund and Chartwell are two solid bonds that have good returns, and at the same time they avoid major losses. Always keep in mind, do your own investigation before you invest. So I want to thank you for watching. Stay tuned for our next update.